Oil remains under significant pressure as Saudi Arabia cut its October official selling prices for US and Asia customers. Asia, home to China and India, was seen as a rare bright spot for oil demand during the current crisis. Saudi Arabia's move highlights the vulnerability of demand recovery in this region. While it's too early to talk about another slowdown in demand, it looks like Asian customers were not ready to take too much oil at current prices, so Saudi Arabia had to offer a discount in order to defend its market share in the key region. In recent days, oil found itself under pressure due to fears about the pace of oil demand recovery, so Saudi Arabia's move intensified the recent negative trend. In addition, the Labor Day marks the end of the driving season in the US, so future declines in inventory levels will be harder to achieve. The West Texas Intermediate crude oil market pulled back a bit during the trading session on Monday, but it should be kept in mind that it was Labor Day in the United States, so therefore it is a lack of volume that will be a major contributor to what we have seen during the day. Ultimately though, the market has drifted lower for the third session in a row, although we did see some short covering. Ultimately, I think that we rally, but given enough time sellers will be interested in shorting this market, particularly near the $40 level. After that, the market is likely to go looking towards the $35 level. I have no interest in buying until we break above the 200-day exponential moving average. The most recent Baker Hughes report has indicated that the number of U.S. drilling rigs increased by 2 to 256. The number of U.S. rigs drilling for oil also grew by 1 to 181. In the previous week, the number of U.S. rigs drilling for oil decreased from 183 to 180. Thus, the number of oil rigs started to rebound after the recent pullback. It remains to be seen whether the number of U.S. oil rigs will stay above 180 in the light of recent oil price action. WTI oil remained mostly above the $40 level in July and August, so U.S. oil producers had the time to adjust their plans with this new price level in mind. Currently, oil is trying to settle below the $40 level. If oil's visit to sub-$40 territory is not followed by a quick rebound, oil will have decent chances to gain more downside momentum and get below the $39 level. While U.S. oil producers are notorious for their quick reaction to market changes, I do not expect immediate changes caused by the recent market sell-off. Previous sell-offs in July and August were followed by quick rebounds, so the U.S. oil industry will likely choose to wait for additional clarity regarding oil's near-term trend.